Hello guys, how are we doing today? Welcome back to our channel and welcome to this episode. I want to believe you're doing good. I want to believe you're doing great. We're still on the Mind Over Market series, and this is the 10th episode, and we'll be talking about developing a resilient trading mindset. I want to believe that you've watched the previous episodes and it has been a great journey so far. I want to believe you've been learning a lot, and I'm following up on all the series. We've been talking about psychology, emotional management. We've talked about several topics as regards to psychology and emotional management. We talked about how to overcome fear and a whole lot about this topic. I'm going to believe it has been a great journey for you as it has been for me. Of course, I've been learning along the way as I'm also sharing in these videos. So this is the 10th episode of the Mind Over Market series. And like I said, we are talking about developing a resilient trading mindset. Now let's get into the video. Trading in the Forex market can be a thrilling and potentially lucrative venture. However, to navigate the ever-changing landscape of Forex trading, one must develop a resilient mindset capable of handling market volatility. In this video, we'll explore essential strategies, life lessons, and practical techniques to help traders of all levels fortify their mental resilience and thrive in the face of market fluctuations. So in this video, we're going to talk about how to develop a resilient trading mindset. How to become, let's use the word, emotionally tough, where you can withstand market volatility. And we're also going to talk about how to handle market volatility. Of course, volatility is a big reason why many people avoid the Forex market. It's a great reason why many people keep losing money. People could make some money on a time where there is less turbulence, but each time there is volatility, their account is gone. I know several people that each time there is high impact news and there is much volatility in the market, their account is gone. So how do you manage all of this? So we're going to teach you in this video how to manage volatility and how to build a resilient trading mindset. Are you ready for this? Now let's get into the 6 steps to building resilience in trading and handling market volatility. Number 1, understanding market volatility. Volatility is an inherent characteristic of the market. We've been using the word volatility since we started. Now, I would like to assume that there are several people who are not very informed about trading and would like to know what's the meaning of volatility. So what is volatility? Volatility is the rapid and significant price fluctuations that occurs due to various economic, political, and social factors. Recognizing and understanding market volatility is the first step towards developing a resilient trading mindset. So when you're trading, you notice there are certain times of certain days, because it doesn't occur every day, and it doesn't have specific days which it occurs. Like, by specific days, I mean it doesn't happen every Friday or let's say every Monday. There are certain days that you could see volatility, and of course many times this occurs due to high impact news. It could also occur due to economic and political factors. So if you were trading, I think last year when Russia invaded Ukraine, you noticed that very day that they invaded Ukraine, you noticed the movement of gold. I think gold moved up to 800 pips on the upward direction. That's bullish. And the same day, it also moved 800 pips on the bearish direction. So there was no major impact news as talking about checking Forex Factory, or where we use economic calendars, let's use the word. When checking economic calendars, there was no high impact news that day, but this was a political factor and it caused the market to move that much. That was high volatility. So volatility is when you have such rapid and significant movement of the market. There are several factors. If you were trading when during the last US election, you could see how the market was moving. I mean, all of these are political factors, several factors that occur. Let's say a country that has major economy, or one of the developed countries in the world experience earthquake, you're going to see volatility in the country's currency. So these are major events. Like, some are political, some are social factors, some are economic factors. So all of these could cause volatility. So now that you understand volatility, we say that it is necessary to understand and recognize volatility in order to develop a resilient trading mindset. So if you don't understand and recognize volatility, you will not be able to withstand what it carries. Imagine the forex market as an ocean with waves. Volatility is likened to the waves, sometimes calm and predictable, and at other times stormy and unpredictable. Adaptability is the key to navigating these waves successfully. So, still talking about volatility, we say that you should liken the forex market to a high sea or an ocean. Sometimes you see huge waves, sometimes you see minor waves. So when the waves is calm, the water is predictable, it's easy to sail through. But there are also occasions where you have the waves get very high and very big, and in those occasions you don't have control over them. You just need to look for a way to manage yourself through the storm and through the sea. Now, number 2, embrace the uncertainty. To handle market volatility, embrace the uncertainty that comes with it. Accept that you cannot predict or control every market movement. Instead, focus on developing a proactive mindset that allows you to respond effectively to changing market conditions. So you need to embrace the uncertainty. Now, let me tell you, the market is not controllable. You can't control the market. You can only control your account. You can control how much you get to risk, how much you get to lose in a trade. So don't even attempt to control the market. The same applies to, if you want to talk about the waves or volatility. You can't control it. So you need to embrace the uncertainty. Understand that this is just the way it is, and you embrace it. Then look for a way to flow and roll with it the way it is. So this brings you to the state of understanding yourself and understanding the market, that this is the way the market is and there's nothing I can do about it. So how do I control myself? How do I scale through this situation? This is just the way it is. Resilience in trading is likened to navigating through life's uncertainties. Just as we cannot control external events, we can control our responses to them. So the same way you can't control external events as pertaining to life in its own, you can't control external events. You can only control how you respond to them. So when we bring that to trading, we talk about volatility. You can't control volatility. You can only control how you as an individual respond to it. So guys, we just launched a new Forex course, and it's a complete guide from beginners to advanced training. If you go through this course, I promise you, I can assure you that you'll be able to trade by yourself comfortably and profitably. It has over 30 videos. Let me scroll down for you to see. It has about 30 videos. You can see section 1. Okay, this section 1, and this section 2. You can see a good number of videos here. I think section 2 is quite a lot. Then we have section 3, 4, 5. In section 5 is where we have the ebooks. Let me open it. You can see that. You see the ebooks. Then you can also see my book, Trading Without Tears. It's also there. So we have all of these in the Forex course, and like I said, it's a complete guide from beginners to advanced. The course is to be selling for $200, but because we're just launching, you can see the strikeout price. It is currently selling for $135, which is 100,000 naira. So for the first 200 persons that will take advantage of this offer, that will purchase the course now, you'll have the course for 100,000 naira, which is equivalent of $135. So click on the link in the description of this video and get started with your journey towards trading profitably. Now, number 3, risk management. Effective risk management is crucial in volatile markets. Implementing appropriate risk management strategies helps protect your capital and minimize losses during periods of high volatility. Set stop loss orders, diversify your portfolio, and allocate your trading capital wisely. Now, listen, in case you are a reckless trader, in case you are a free-spirited person, let's use that word, free-spirited, if there's any way that applies to trading. In case you're the person who is fond of trading without considering every factor, when it applies to a volatile market, you can't afford to be that way. You need to implement very good risk management strategies because you will not survive it. The market, especially when there is high volatility, it's super unpredictable. In fact, there are occasions when the market is calm, you can tend to claim that you're predicting the market to a certain extent. But once there is high volatility, you can't do that. So in this time, you need to be very serious about your risk management strategy. You must give so much attention to it, and you must not take anything for granted within this period. Think of risk management as a safety net while walking on a tightrope. It ensures that even if you stumble, you won't fall too far. So risk management, let's liken it to walking on a tightrope. It's your safety net. So if you tend to fall, or if you get to stumble and fall, you won't fall too far. You know what that means. So if we bring it to trading, with proper risk management, if the market goes against you, which will happen in some occasions, you won't get to lose too much of your portfolio. A volatile market has high potential to make you lots of profits. At the same time, it has high potential to make you to cause you a lot of losses. So for that reason, you need to use proper risk management. You can't afford to take any trade without considering every aspect concerning your risk management strategy. Now, number 4, develop a trading plan. Like I said in a previous video that we're going to be talking about trading plan in almost every video in this series, because there is no how we can talk about psychology and emotional management without talking about a trading plan. A well-defined trading plan is a cornerstone of a resilient trading mindset. It should outline your trading goals, strategies, risk tolerance, and contingency plans for volatile market scenarios. Stick to your plan and avoid impulsive decisions driven by market fluctuations or emotions. Of course, this is very common when you see the market, when you see high volatility in the market. You tend to be taking trades impulsively and randomly. Sometimes, let's say you're seeing it buy at a time, immediately you feel it is buying, you take a buy. At another occasions, within, let's say 2 to 3 minutes, you see it start selling again, and you're already taking a sell, and you just keep doing that. So as a resilient trader, you need to be proactive. You need to make up your mind ahead of a time like this, that if this happens or when this happens, this is what I'm going to trade and nothing else. Irrespective of what the market do, I'd rather stay out of the market than keep dancing with the market, buy when it buys, sells when it sells, and all of those reckless and unguided behavior. You don't want to be like that. You want to already have your plan stated out and be able to stick to that plan. Just as a ship needs a compass and a course to sail through rough waters, a trading plan provides direction and discipline during turbulent times. So, trading plan is compared or is likened to the compass in a ship, and it gives the ship the course. So, you need a compass, you need a course in order to move towards your goal. So, your trading plan is like your compass, or let's put it as it's like your compass, and it's what keeps you focused. Irrespective of what happens in between, you still stay focused and you stay committed towards this course, which is, of course, taking you to your goal. Number 5, maintain emotional balance. Controlling emotions is vital for successful trading. Market volatility often triggers fear, greed, and impatience, which can lead to irrational decision making. Cultivate emotional discipline, practice patience, and remain calm even during intense market swings. So, as a resilient trader, you need to maintain emotional balance. Of course, like I've said, there will always be occasions that put you off balance, but you need to stand your ground and ensure that you maintain emotional balance, because this is what will keep you fixed and steady to your goal and committed to the course. Imagine yourself as a surfer riding massive waves. Balance, focus, and composure are essential to maintain control and navigate through the volatility. Number 6, continual learning and adaptation. The forex market is constantly evolving. To stay ahead, cultivate a growth mindset and embrace lifelong learning. Keep up with market trends, study economic indicators, and analyze your trading performance regularly. Adaptation is key to thrive in ever-changing market conditions. So you need to keep learning, and you cannot afford to stop learning. The market is always evolving. So in order to stay ahead of the game, you must not stop learning. Embracing continuous learning and adapting to new situations are not only vital in trading, but also in all aspects of life. Flexibility and open-mindedness lead to growth and success. So being able to be flexible, to adapt and keep learning is not restricted to only trading. You can also bring this attitude into your life, and it will help you keep growing and stay well informed as an individual. So you need to keep learning, you need to remain flexible. In conclusion, developing a resilient trading mindset to handle market volatility is a journey that requires patience, discipline, and self-awareness. By understanding market volatility, embracing uncertainty, implementing risk management strategies, following a well-defined trading plan, maintaining emotional balance, and embracing continual learning, traders can navigate the forex market with confidence and achieve long-term success. Remember, it's not just about the profit, but also about the personal growth and life lessons gained along the way. May your journey as a forex trader be filled with resilience, adaptability, and abundant opportunities.